I'm joined today by Oliver Carson, CEO and co-founder of award-winning Universal Partners, a leading FCA-regulated cross-border payment and foreign exchange specialist. Their expertise lies in assisting individuals, businesses, and financial institutions with their forex needs, aiming to optimize their currency transactions and mitigate the risks associated with foreign exchange fluctuations. Having recently been named by Pan Finance as the UK's most trusted foreign exchange broker, congratulations are also in order. Oliver, thank you so much for joining me today.
Thank you, Sophie. It's a pleasure to be here.
So you've overseen fantastic growth over the past 2 to 3 years at Universal Partners. What would you say are the main factors that's driving that success?
Like any successful business, okay, it wouldn't be where it was today without the people in the business. One thing that we've been very effective at doing is bringing in and being highly selective the type of people with the right experience to drive the business forward. And we've even managed to define some core principles that are important to every single employee at Universal Partners today. You know, we've even put these on the wall on our new office. And I'll be more than happy to share them with you
today. Please do.
Right? So the first one is hard work, determination. Everything we've achieved from day one wouldn't be possible if we didn't put the hours in. Everyone's bought into like the same vision, goals and objectives, and being in the office every day really helps with that collaboration and working towards the same vision. The second one is transparency. So transparency is important because you have to have integrity, right? You have to be transparent with each other. You have to be transparent with customers if you're going to retain business.
Sure.
So transparency is a really important principle that we've got throughout the business, which leads quite nicely into loyalty, right? Because we're very fortunate that we've had people since day one or very early on in the business that are still in the business, and the majority of the senior management team as well are still here today, right? Because we're on an exciting journey and we've created that culture where people want to be here and they can see and they can grow with the company. And the fourth principle is communication, like collaboration. Communication and collaboration is important because you have to, if you want to have people working in unity rather than solo in their lane, that's going to result with faster growth. So we've created a culture where everybody gets on, it's like a big family unit, and it's not going to be as easy to maintain that when we go up to 150, 200 staff in the future. But for now, we've done very well at creating that collaboration between teams and throughout the business to really kind of lean on each other for that growth. Another really important aspect of which defines this success is the amount that we invest into our people. So the majority of employees at Universal Partners receive 6 to 10 hours training per week.
Wow.
We've even created a kind of like an FX academy for young people that want to leave school or young graduates out of university, where we'll bring them in, we'll provide them training on a daily basis for 12 to 18 months. We'll teach them about financial markets, how to communicate to customers. We'll even put them through their financial regulations exams and show them a career path that could lead to being a senior portfolio manager throughout the business, where you're dealing with customers on a day-to-day basis. So I say, to summarise, that's the first core element, is the people, the culture and the training. The second core element, which defines the growth and success of the business, is very much down to the technology. There's only so much that a person can achieve in one day. There's only so many hours in the day. And what we've done from the start is really invest into automation, technology to really kind of innovate and be ahead on the market. And I can give an example on that. As the modern day continues, customers and consumers and businesses are expecting their money to be received and delivered quicker and quicker year on year. So we invested very heavily into reconciliation processes and systems to ensure that as soon as we receive our customers' money, that we're remitting that out within a matter of minutes. Prime example of how we're going to need to continuously invest in technology to further automate and to facilitate future growth throughout the business. And I think that leads quite nicely on to the third point as well. We have long-standing relationships with our customers, right? It's about when we onboard a customer and you're dealing with Universal Partners, we're not just here as like a reactive company. We very much want to understand our customers' needs, and when we do, help them implement business solutions to really make their life easier and also save money, and be cost effective. So that would be long-standing relationships with our customers, which essentially is another reason for why we have client retention rate of around 90%.
Wow.
You know, which is, you know, it's phenomenal to have a business where customers are staying in the company. And that's part of the reason why our business has grown so much in the last 24 months. You know, if we look at our last financial year, before the most recent one, we were turning over around 700 million in turnover. And if we look at our most recent financial year, you know, we've achieved 1.3 billion pound turnover in only within 12 months. And that's following on from COVID as well, you know, which wasn't an easy challenge.
So could you explain a little bit more about how Universal Partners helps businesses to expand into international markets?
We have a client-first approach. Okay, we train all of our staff, all of our senior portfolio managers, and everyone throughout the business that's dealing with customers on a day-to-day basis, that you have to go that one step further to really understand the client. You know, what industry they're in, what risks that are associated to, what financial objectives that they want to actually achieve. Because without knowing this information, it's very hard to actually then go and propose solutions for where that business wants to go moving forward into the future and what their visions are, right? So once we understand these challenges, we then would go in and help them implement solutions, i.e. if they're looking to move into a new market, into say, let's just say a high risk jurisdiction it's not actually easy to deliver and send money to, we have 120 currencies. So we're able to facilitate and actually get money into jurisdictions that are very difficult to do so. If we look at another example, and our collection account capabilities now is expanded phenomenally over the last 2 to 3 years. So if you take an example of a UK-based business, say a UK-based clothing client that we have on the books, and they are looking to move into, say, Canada. Now, they might have customers that want to pay in local currency, in Canadian dollars, okay? So if this business wanted to go and set up a Canadian dollar bank account with their bank in Canada, it's a very long-winded process. It's going to take 6 months. It's going to cost quite a lot of money to do so. There's a lot of back and forth. And one of the real benefits of businesses actually working with Universal Partners is that we're actually able to set up a local account in Canada under these clients' names within a matter of hours. So the customers, they can then receive local currency in Canadian dollars. They are able to pay out locally in Canadian dollars if they want, or they're able to exchange that money and remit that to any destination that they want to into whatever currency.
Great. So I feel like we've touched upon this a little bit there. So just to snowball off of that, what advantages do businesses gain by collaborating with a provider such as Universal Partners, as opposed to relying solely on their banks?
It's cost effective to do so, okay? The banks are very large financial institutions. They have set parameters of what pricing that they're actually able to offer customers. And this usually is based upon the volume that they're transacting currency on an annual basis. Whereas we, Universal Partners, have a lot more flexibility on the pricing they're able to offer customers. And we also have a panel of multiple different liquidity providers that we are constantly reviewing, right, to ensure that our customers always receive the most competitive exchange rates in the markets. Following on from this, high transaction fees, right? Lots of banks still charge ridiculous fees, you know, especially if you're looking to send money into not just a basic place in Europe or the US. If you're looking to send money to Africa or China, you know, some of the banks are still charging 30, 40, 50 US dollars for one transaction, right?
Yeah.
And if you look at intermediary banks as well, right, when you start routing US dollars or currencies where funds get sent through another bank, sometimes these banks in the middle take cuts and charges from the total amount of the consumer. So we always ensure that if we're sending $100,000 to a supplier, $100,000 is going to turn up, because we're going to make sure that any intermediary charges we're going to take to ensure that our customers receive the full amount every time.
Right.
And then the most important factor really of why businesses work with us, the banks simply are not going to be able to offer the level of service that we do for our customers. Yes, we have long-standing relationships, and we also understand exactly what our clients do and their business patterns. So, for example, if you've got a customer that's importing, say, $10 million worth of products per year from China, and let's say they've got an invoice coming up that's due for payment of $500,000 on the 30th of the month. Now, if we look at where sterling US dollar might have been traded the previous 2 weeks upon the invoice arising, let's say the exchange rate was sterling versus dollar of 125. Now, 3 days before that invoice is due for payment, right, sterling picks up and moves to a point of 1.28 against the dollar. So what that means for that business is that that invoice is over £10,000 less for that business to pay 2-3 days earlier.
Sure.
Now, the bank are not going to call the customer and alert them of that move, right? They haven't got the resource to do it, and it's never going to change like that from the banks, right? Whereas what we would do is we would notify the customer. You know, we would add that level of service and help them with market entry into the market, because our customers are extremely busy. You know, they're managing directors, they're finance directors, they're treasury managers of large multi-million-pound businesses, and they haven't got the ability to just sit there and watch the foreign exchange markets every day. And that is what we do. We are essentially an extension of our customers' finance teams, and we've got dedicated analysts that watch the markets more or less 24/7 for our clients to ensure that we can notify them of any opportunities that arise in the markets. And that leads on to the final point of speed of transactions, right? Some banks still take 3, 4, 5 working days to actually deliver currency around the world to certain countries and beneficiaries. Here at Universal Partners, we're always routing funds in the quickest method to the destination. That way our customers' funds are always being received as soon as possible. And that's what customers want day to day, and they appreciate that service.
So against the backdrop of today's challenging economic climate, what do you see as the main risks that businesses face in international markets?
Firstly, unfortunately, following the Russia-Ukraine war, right, there's been supply chain shortages across the globe, and that has meant increased costs for multiple businesses internationally, right? So we're now in a market where we've got high inflation, okay, we've got rising interest rates on a month-to-month basis for the primary G3 currencies, you know, UK, Europe and the US. And we've also got low levels of unemployment, right, making it very difficult for businesses to actually have certainty, right? Because all of these key factors that I just spoke about then result in one big risk for businesses, and that is increased volatility, right? When you have increased volatility in markets, it makes it extremely difficult for businesses to actually forecast and plan ahead and have a certain stable number of expectations of costs, all right? And that is why, and I can give a prime example again of that of today in a customer's perspective of how volatility really affects businesses and why you need to have a solution in place, especially if you're looking to grow a company in today's markets. Let's take one of our clients, a UK-based furniture business, okay? They're importing $10 million a year worth of product from China, okay? So they're based in the UK, they need to exchange sterling into US dollars to pay for the products that they're importing.
Right.
Right, so if we look at where sterling versus US dollar has traded just over the last 18-month period, okay, we've seen a high of over 1.4, okay, £1 versus dollar is over 1.4, and we've seen a low as 103. Now, from buying at the top to the bottom of the market, that's over a 35% difference, okay, which is phenomenal, okay. If you're a business, right, this furniture business might have 10 or 15% profit margins, meaning if they actually costed their goods at the top of the market and then they had to buy at the bottom, they're going to essentially be losing money and could go out of business because just from adverse exchange rates and volatility. And that is why it's extremely important to actually have a strategy and to mitigate this risk, because one thing for sure, volatility is not going anywhere. And if we look at where volatility was trading at only 4 or 5 years ago to today, it's over, volatility levels as a whole in G10 is twice as high, meaning that the actual markets are moving twice as much in one day as what they used to, right? And this is what we do at Universal Partners, is we go into these businesses and we look at their buying patterns and how they're costing prices, and we ensure that we help them implement a strategy that's aligned to mitigate these risks and volatility.
It definitely feels like a running theme of being proactive as opposed to reactive. It's about being ready. all the time.
Yeah.
So how should businesses approach this current turbulence, in your opinion, in the currency and international payments markets?
The answer to your question is hedging, right? It's to mitigate these risks. It's to make sure that if you have got future exposure and you've worked off a set cost price, it's that you'll need to look at fixing that exposure in an exchange rate that works for your business, okay? And there is no out-the-box solution, one size fits all, because every business is different, right? Every business is in a different market, they have different risks, they have different financial objectives, they have different risk appetites. But to summarise it down to two of our most popular products from hedging, and which I can give some good examples today, the first would be what we call like an active hedging approach, is one solution on how to implement a hedging strategy into the business. So an active hedging approach would be more of like a medium-sized business, right, in a very highly competitive market where the margins are quite low. Their profit margins are quite low, right? So an active hedging approach would mean that you'd need to be actively looking to hedge deals on a monthly, quarterly basis, okay? Because what you're then doing is you're allowing to protect your downside in the market. So you're protecting any short-term adverse movements against you. So you've secured your exchange rate. However, you're able to then participate in upside movements as well. So if that exchange rate actually gets better, you haven't hedged too long. So you're able then to reset your cost prices and budget rates to be competitive in an industry where you're fighting for business, essentially, okay? On the other hand, you have what we call like a passive hedging approach. Now, an example of a passive hedging approach would be a larger business in a lower competitive market with very high profit margins, okay? And I'll give an example of a high profit margin business, so like 30-40%, because a passive approach would be you're looking at longer term solution, so over say like a 12, 18, 24 month process, and looking at fixing and securing a large amount of your foreign exchange exposure and requirement that you need, and then reviewing it down the line. Because why a passive hedging approach would be more suitable for these businesses is that they can afford, if the exchange rate moves up 3, 4, 5%, it's not going to affect them that much, and they're still working off an exchange rate that works for their business that they've set internally. So they can afford to look at this on a less active approach and worry about it in say 6, 12 months down the line.
So the trajectory of Universal Partners over the last few years has been outstanding. So I guess my last question has got to be, how do you build on this impressive growth? What comes next?
Well, we've certainly had some phenomenal growth since we set the business up. You know, we're on a very, very exciting journey for where we're planning to take the business, and we still really feel like this is just the start. You know, we've got so much ambitions and great strategy lined out for where we want to take the company moving forward. You know, we've recently gone through a rebrand. Okay, so we changed our name from Universal Partners FX to Universal Partners. Now, the reason for this is because we're not just a business that provides foreign exchange service anymore. Don't get me wrong, we're always going to have a core element of providing these foreign exchange services, and we're not going anywhere or changing that element of the business. But we're constantly taking feedback from our customers, and we're looking to continuously expand the product offering to help service them and implement more solutions to help them grow and expand internationally as well. And a good example of that would be we've recently brought in trade and invoice finance facilities. It's very difficult in a market where there's rising interest rates. The cost of credit, the cost of collateral is increasing, making it difficult for businesses, right? Because lots of these companies have got debts, have got mortgages. You know, they want to expand. So by offering these services, it's going to further help support these customers in achieving the best rates on credit lines that we're able to facilitate for them. We're also looking to invest further into our collection account capabilities. You know, we've got an alternative banking division that we're just actually looking at launching in the foreseeable future. So we're going to continue to invest into that. And further also support new products, MiFID regulated products, which are very exciting, more sophisticated as we move into kind of more of the institutional space into the future. We have customers that are not just based in the UK, we have customers based in the EEA, so there will be a plan to set up an office in the EEA to further support and facilitate these businesses as we look to also expand internationally in our global footprint. So really exciting times lie ahead for anyone connected to Universal Partners.
Oliver Carson, CEO and co-founder of Universal Partners, thank you once again.
Thank you, Sophie.